It always starts quietly, a rumor, a strange policy change, a sudden shift in tone from governments that once claimed to support innovation. And then, almost overnight, something unthinkable becomes possible. Today, we're facing a new kind of threat, one that almost no one sees coming. Not inflation, not recession, but confiscation, not of houses, not of gold, of something much more modern, much more invisible, and much more vulnerable than people think. Crypto. And if that sounds dramatic, wait until you hear what history reveals about what governments do when their economies start breaking down. Because every time a nation faces a monetary crisis, one pattern repeats. The state reaches for whatever wealth it can get its hands on, and in 2025, that wealth is no longer gold, it's digital. Think this can't happen? It already has multiple times. The only difference is that back then, people didn't have Bitcoin or Ethereum. They had gold coins, cash savings, land titles. And when the pressure mounted, governments seized it. Ordinary citizens woke up believing their money was safe. Until it wasn't. Now, imagine this. It's the middle of the night. Your phone vibrates, a message from your exchange. Due to new emergency regulations, withdrawals are temporarily suspended. You refresh. You try again. Same message. You check Twitter. Everything is blowing up. And slowly, it hits you, your crypto isn't yours anymore. It belongs to the system that controls access to it. Far-fetched? Maybe. But history says otherwise. Because this is exactly how financial confiscation begins, suddenly, quietly, and for your protection. Let's rewind. The year was 1933. America was sinking deeper into the Great Depression. Banks were collapsing, unemployment was soaring, confidence was evaporating. And in a single morning, President Franklin D. Roosevelt signed Executive Order 6102, a document that made it illegal, yes, illegal for citizens to own gold. People had just 21 days to hand over their wealth to the government. Not optional, not voluntary, mandatory. Violated, and you faced a $10,000 fine, which today is more than $200,000 adjusted for inflation, or 10 years in prison. Overnight, what millions believed was financial freedom became contraband. Their gold confiscated, and the people had no say. Now, pause for a moment and imagine that moment through the eyes of an ordinary American, a man who saved gold coins for decades, maybe a family who inherited a few bars from their grandfather. One morning, the radio announces, "Turn it in, your life savings, gone." This isn't a conspiracy theory, it's historical fact, and it didn't just happen in the US. Argentina did it, Australia did it, India did it, Venezuela did it just a few years ago. Countries seize assets because it's the fastest way to plug a financial hole. And here's the part nobody wants to admit, governments don't hate crypto. They fear losing control of money. Because when people have money governments can't touch or tax easily, the state loses power. And when states lose power, they do whatever they must to get it back. So the question isn't could crypto be confiscated? It's how close are we to the moment where governments decide they have no choice? And that's where 2025 becomes so important. Because right now, the global economy is sitting on fault lines, record national debt, rising interest payments, slowing economic growth, banks under pressure, and a silent war for control over digital money. The US is more than $35 trillion in debt. Europe is wrestling with inflation that refuses to die. China is fighting a collapsing real estate bubble. Japan is buried under debt of more than 250% of GDP. When systems reach these levels of stress, they don't reform, they grab. That's why almost every major nation is now preparing central bank digital currencies, CBDCs, digital dollars, digital euros, digital yuan. And what do CBDCs all have in common? Total traceability, total control, and the ability to freeze or redirect money with a single command. If you want to see where this goes, just look at Canada in 2022. During the trucker protests, bank accounts of ordinary citizens were frozen without a court order. Not criminals, not terrorists, just people who donated to the wrong side. Overnight, their financial freedom vanished. No judge, no trial, just a political decision. That was a preview of the world governments are building, a world where money is programmable, conditional, revocable. Now imagine that same power but applied to crypto. Not by hacking blockchains, not by seizing your hardware wallet. Governments don't need to do any of that. They just need to target the platforms you rely on, exchanges, payment processors, off-ramps. They don't have to outlaw Bitcoin. They just have to outlaw private crypto unless it's registered, approved, fully KYC compliant. Sound crazy? The European Union is already pushing regulations requiring full identification of all crypto users. The US Treasury is exploring rules to track unhosted wallets, meaning your private wallet. And several countries, including India, are pushing towards strict bans on private coins altogether. Here's the scary part. Confiscation doesn't start with a knock on your door. It starts with one sentence: for national security reasons. That phrase has been used to justify everything from phone surveillance to airport searches to freezing billions in overseas assets. Once that sentence enters a bill, a speech, a meeting, confiscation becomes a tool, not a theory. But to understand where this story is going, you have to look deeper into history. In 1917, during World War I, the U.S. government used the Trading with the Enemy Act to seize private assets from anyone suspected of aiding foreign nations. Not proven, suspected. Bank accounts, property, businesses, all taken, all legal. In 1971, when Nixon ended the gold standard, savers across the world lost 30% of their wealth overnight in real dollar value. In 2013, Cyprus, yes, a European Union member raided bank accounts during its financial crisis. Anyone with more than 100,000 euros had a slice of their savings taken to bail out the banks. So let me ask you, do you really think governments won't try something similar with crypto if things get desperate? Of course they will. And they won't call it seizure. They'll call it stabilization, anti-money laundering, combating illicit finance, protecting the financial system. We've survived long enough to learn that governments never confiscate wealth directly. They simply change the rules until surrender becomes compliance. But here's where it gets even more interesting and much more dangerous. Most crypto isn't held on private wallets. It's held on centralized exchanges. Kraken, Binance, Coinbase, Qcoin, and centralized platforms can be ordered, pressured, or forced. They can be compelled to freeze accounts, to restrict withdrawals, to report wallet addresses, to block suspicious transactions. We've seen this movie before. When the U.S. wanted to shut down offshore tax havens in 2010, it passed FATCA, the Foreign Account Tax Compliance Act. Overnight, 110 countries were forced to hand over data on U.S. citizens' bank accounts. They didn't want to comply. They argued, they protested. But the U.S. gave them one choice: comply or be cut off from the global financial system. And they complied. Now apply that same pressure to crypto. Exchanges depend on banking access, on licenses, on regulators. So what happens when a government says, freeze private wallets until they're verified, report all transactions over $600, confiscate unregistered crypto held on exchange, lock the accounts of anyone who refuses to transition into the new digital currency system? Overnight, millions would lose access. And the worst part? Most people wouldn't even fight. They would accept it the way people accepted restrictions during financial crises throughout history. Because when the system is collapsing, fear becomes compliance. But there's another, deeper pattern, a psychological one. During every period of financial stress, elites protect themselves first. They get early warnings, they get special exemptions, they move their assets offshore into trusts, into private agreements. Ordinary citizens, meanwhile, are told to remain calm, to trust the system, to wait it out. We saw it in 2008 during the housing crash. Banks protected their executives. Homeowners lost their houses. We saw it during COVID stimulus packages. Billionaires gained trillions in net worth while small businesses collapsed. So when the next crisis hits, and it's coming, who do you think will face confiscation first? Everyday crypto holders, not hedge funds, not politicians, not megabanks. Let me tell you a micro-story that captures the danger perfectly. In 2015, a Venezuelan programmer named Daniel had been mining Bitcoin quietly in his apartment. Nothing huge, just enough to survive the hyperinflation destroying his country. One night, military police raided his building. They confiscated his equipment, seized his crypto funds, and accused him of economic sabotage. No trial, no appeal, no defense, his digital wealth, gone. And here's the twist, they didn't even know what Bitcoin really was. They just knew he had something valuable the government didn't control. That alone made him a threat. If a collapsing government can do that to one man in Venezuela, imagine what a powerful, organized nation can do on a global scale. But this story isn't about fear. It's about recognition, patterns, signals, warnings. Because history doesn't repeat exactly, but it rhymes. And right now, the rhyme is getting louder. Governments are running out of time. And when governments run out of time, they reach for whatever ISNT nailed down. This is where the modern battlefield becomes much more subtle. Because crypto is decentralized, yes, but access to crypto is not. Most people store their wealth in places that can be controlled. Cloud-based, wallets, exchange apps, mobile platforms. And the moment regulation shifts even slightly, those platforms will comply, not because they want to, but because they have no choice. That's why 2025 is such an important turning point. It's the year dozens of nations plan to launch pilot versions of their digital currencies. The year new global AML rules tighten. The year U.S. policymakers face a once-in-a-generation fiscal crisis. And the year geopolitical tensions could trigger temporary emergency measures that become permanent. And here's a chilling possibility almost no one is talking about. What if governments don't confiscate crypto directly, but swap it? Imagine waking up to a notice: all crypto assets must be converted into the official digital dollar within 60 days. Not a ban, a transition, a modernization effort, a security upgrade. Your Bitcoin is suddenly being exchanged at a rate chosen by the state into a programmable currency they control. Refuse? Your account is flagged, your bank access restricted, your passport renewal delayed. Sounds extreme? China already operates a social credit model where financial privileges can be revoked instantly. Europe already freezes assets of sanctioned individuals without trial. The U.S. already forces banks to report cash withdrawals over $10,000. The infrastructure for confiscation is already here, it just hasn't been activated yet. Before we continue, if you want to understand these patterns before they hit the mainstream, before the news breaks, before regulations tighten, make sure you subscribe. This channel exists to give you an early warning when the next financial shock begins. And sharing this video helps others see the hidden patterns governments don't want people to notice. Let's go deeper. Because there's a paradox at the heart of crypto confiscation. The more valuable Bitcoin becomes, the more governments will want control. And as institutional investors pour in, the political resistance to regulation weakens. Look at gold. When ordinary people owned gold, the U.S. banned it. But when central banks owned gold, the U.S. restored convertibility decades later. Power, not principle, determines policy. So imagine a future where governments hold Bitcoin on their balance sheets, a future where they treat it like strategic reserves. In that world, private citizens holding decentralized, unmonitored crypto become a threat to monetary authority. Confiscation then becomes a matter of policy alignment. And it only takes one crisis, one cyber attack, one banking collapse, one geopolitical emergency for governments to pass the kind of emergency order that changes everything. And there's another scenario even more alarming. Instead of confiscation, governments could simply tax unrealized crypto gains. They wouldn't need to take your coins. They'd just bill you for value you haven't even cashed out. Don't pay? They freeze your accounts. They restrict your bank transfers. They suspend your exchange access. Suddenly, not complying becomes impossible. You either surrender the crypto or you lose your financial life. And because the tax would be framed as fair, modern, targeted at the wealthy, most citizens would support it until it hits them too. Let's look at everyday people in these scenarios. A middle-class investor in Germany who bought Bitcoin in 2017, a truck driver in the U.S. who dollar cost averages every week, a student in India saving in stablecoins to escape inflation. These are not billionaires. They're ordinary people trying to protect their future. And they're the ones who will face the consequences first. Because they don't have offshore accounts, they don't have lawyers, they don't have political protection. They'll wake up one morning to find their wallets frozen, their withdrawals blocked, their assets temporarily held for verification. And that phrase, temporarily held, is always the beginning of a permanent loss. But here's the twist you must understand. Crypto can be confiscated, yes, but it can also survive confiscation attempts. It has before. China banned Bitcoin mining repeatedly. Crypto survived. India attempted to ban crypto. Crypto survived. Dozens of countries have imposed restrictions, and the decentralized network kept running. So the question becomes, who survives the transition? The people who understand self-custody, or the people who trust third-party platforms? Think of it like this. In 1933, Americans didn't lose their gold because the gold vanished. They lost it because it was stored in vaults, banks, and institutions that complied with government orders. Those who held gold privately, quietly, in forms the state couldn't easily track, kept it. History suggests the same pattern will apply to crypto. Confiscation won't target the blockchain. It will target the choke points, the places where your identity connects to your assets. So if crypto is the new gold, The question becomes, are you holding it like 1933 Americans? Or like the few who understood the system and protected their wealth before the order came? And that brings us back to today. Back to the silent warning signs appearing in financial statements, in regulatory documents, in speeches from central bankers. When governments talk about closing loopholes, modernizing finance, anti-fraud, or national digital infrastructure, they're not naming crypto directly. They're preparing the legal ground to control it, to absorb it, to pull it into a system where every transaction flows through something they can see, track, approve, or deny. And here's the most chilling prediction. The next major financial crisis, whether sparked by debt, recession, geopolitical conflict, or banking instability, will be the moment governments draw the line. Crypto will not be banned outright. It will be absorbed, integrated, managed, and that process will look like confiscation for millions who thought they were safe. But we still have time. Time to understand the signs, time to study the patterns, time to prepare. Because the future won't belong to the people with the most assets. It will belong to the people who recognize threats before they become policies, before regulations hit, before governments begin to protect citizens from their own money. And that's why this message matters, not as fear, but as foresight, because history is repeating, and if we ignore the past will take from us again. If you want to understand the next phase of this story, if you want to spot the next financial shock before it hits, subscribe, because the people who understand what's coming are the ones who survive it, and share this video to warn others about the hidden patterns that reveal what governments will do next.